We're starting off September with Peter Hugg. He joins me next. Hi, Peter. Thanks for being with us.
You're welcome, Daniela.
Peter, let's start off by getting your thoughts on Syria as we await news on how the U.S. will act. What weight and effect is this having on gold?
Well, I don't think the Syrian issue, we've mentioned it over the past 10 days, is going to be a serious catalyst for the precious metals unless it gets out of hand and you get Iran and possibly Russia and some of the more extreme elements reacting to what, if anything, happens in Syria. And that's still, in my mind, an open question. I think Congress has made a good point. It's one thing lobbing in 20 missiles, but then what? So I'm not at all convinced that Obama's going to get the approval that he's looking for to do the surgical strike.
All right, Peter, let's talk about those imminent strikes in South Africa now with gold producers, something that could definitely impact gold prices.
Well, I think obviously it'll be bullish. There's some, it'll be underlying supportive for the market. South Africa is still a respectable producer of gold. They're nowhere as big as they used to be in the 70s and 80s, relative gold. Again, my concerns with the South African situation and production there is more lean towards the PGMs. I remain price positive on both platinum, palladium, and rhodium. But obviously, strikes in South Africa is going to give any bearish trader pause. In the overall scheme of things, it's a bullish factor.
Also this week, Peter, we have a long list of central banks that are planning to speak. Anything we should be paying attention to in particular? Yeah,
I think this market, Syria aside, is going to trade short term. It's going to be very volatile. I suggested this morning that Friday's move was basically an aberration. You could take Friday and just throw it out the window. I mean, most of the chief dealers, the players that I know, weren't even around last week. The desks were being run by junior traders. I suspect they were given instructions, do not be exposed going into the weekend. The market had a long bias coming into Thursday, so when they squared their positions, it created some softness in the market. This morning, the market opened up over 1,400 again, and I think as long as the technicals stay in play, and again, if we ignore Friday, technicals stay in play, the market still has some bullish momentum here.
All right, Peter, let's wrap up now with support and resistance levels you see for gold and silver.
Again, if we wouldn't have been in the Labor Day week, coming up to Labor Day weekend last week, I would have been very unsettled with gold under 1397. But again, I consider Friday a total aberration on the true market trend. So I'm watching support resistance lines, and I think as long as gold can maintain above 1397, that's where I have a stop. I think the momentum is higher. It'll take some work to get through 1424, but if we can get through 1424, I think 1455 is the next target in my mind. But in between, I think 1397, 1424 are your range, and a break of either side of that range will create some momentum. If it breaks below that 1397 range and gets into the low 1380s, there's going to be some selling from program trading in here that could take gold all the way to 1355. So the jury's still out. I'm leaning to being bullish, but you need to watch those levels.
Sounds good. Peter, thanks for being with us.
Thank you, Daniela.
And thanks for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com.